Mr. Speaker, the asset protection scheme I announced in January has played a vital role in supporting confidence in financial markets. Let me remind the House of the key features which I set out then. It provided insurance against losses arising on a pool of bank assets, and in return, the banks paid a fee in the form of shares. The effect of the scheme is to strengthen the capital position of any bank in the scheme, but this, of course, carries the risk of exposure for the taxpayer. The scheme was open to all major UK banks, but in the event, improved market conditions meant that only 2 banks decided to participate. Since then, further improvement in market conditions means that Lloyds have been able to develop a better plan. They now don't need to participate in the scheme, and this will significantly reduce the cost and exposure to the taxpayer. Mr. Speaker, I will now explain in detail our proposals to better restructure the banks and also make them stronger. Turning first to Lloyds, following the recapitalisation last October, the government owned 43% of the bank. In March, we reached an agreement in principle with Lloyds on their participation in the asset protection scheme. This would have increased, through the fee, their capital by over £15 billion, increasing the cost to government, with our stake rising in Lloyds to 62%. And we agreed then, in principle, to insure £260 billion of assets, giving us a very large contingent liability. But now that market conditions have improved, we've agreed a better proposal for Lloyds to bring in substantial private capital and reduce taxpayer exposure. So Lloyds have announced today that they will raise £21 billion in the open market. Mr. Speaker, today's decisions make Lloyds a stronger bank and provide better value for the taxpayer, ending the exposure of the taxpayer through the insurance scheme, a substantial fee in return for the insurance provided to date, and a substantial capital contribution from the private sector, whilst maintaining our shareholding at 43%. Mr. Speaker, I now turn to the Royal Bank of Scotland. It is a bigger bank than Lloyds, with a more complex balance sheet and a greater exposure to losses, mainly due to their purchase of the Dutch investment bank ABN AMRO. Mr. Speaker, in the case of RBS, the overall level of government support will remain broadly the same as I announced in February. But this revised deal is better structured, with better risk sharing and greater incentives to exit. There is a higher first loss payable by RBS, £60 billion up from £42 billion. There are better incentives, with a fee of £700 million for 3 years and £500 million thereafter, and fewer assets to be insured, £282 billion instead of £325 billion. Mr. Speaker, as part of these restructured deals, we are also pushing forward reform at these banks with improved lending and remuneration policies. Both Lloyds and RBS will be in a stronger position to continue lending. Lloyds will increase lending capacity this year and next, with an additional £11 billion for businesses and £3 billion for home buyers in each year. And RBS will continue to meet their lending commitments of £25 billion this year and next, as I indicated earlier this year.